When you're communicating with owners, right? In marketing, there's something called think of what's the person's favorite radio station, WIIFM. What's in it for them? Or what's in it for me, right? So speak in terms of what is in it for the other person. As an example, hey Dan, look, really appreciate your time. Do you mind sharing with me, just kind of ballpark, what was your revenue last year? And then what is your current revenue? And by the way, the reason I'm asking that is because if you can give me that information, that would really help me giving you the best possible offer. All right, welcome back to the Storage Win podcast. This is episode 5 with Dan Wenzel, where I am coaching him live on a quest to have him get his first self-storage deal. If you haven't had an opportunity to check out the previous 4 episodes, after you listen to this one, I want to encourage you to go back to episode 1 because we've sequentially and intentionally and very methodically, I would say, been building Dan up to the point where he's at today. Now, before we dive into really the coaching on this episode 5 podcast, I want to recap what we did in episode 4, right? So one of the things we talked about was making sure that Dan is committed to tracking his KPIs, right? The key performance indicators, which are the important numbers that when tracked and measured will help you grow, will continue to help you make progress. It'll also help you adjust and make modifications when need be, when you're not getting the results that you may be wanting. I definitely challenge him to stop over-preparing and to take, I always use the words massive imperfect action, MIA, right? Massive imperfect action. And then we talked about making offers more consistently and having those meaningful conversations. Now, at one point I remember, Dan, correct me if I'm wrong, but we paused and we talked about mindset challenges and some of the struggles and kind of like the inner critic, right? The devil on your shoulder that is there to bring you down, to tell you why you can't do something, or maybe you're not worthy, or you're never going to measure up. Like, we've probably all dealt with that at some point or another. So we talked about that. Part of our coaching and part of your agreement to do this on the Storage Wins podcast was you got to be brutally transparent. You got to be authentic, raw, and real. And sometimes that means being honest about the fact that you didn't do your part. And I think, if I remember correctly, on episode 4, you hadn't made any offers in the last 7 days, right? And by the way, Dan, I see you like smiling. I don't say that in judgment. I just say that in like, okay, you didn't get done what you needed to get done. Sometimes we have to stop and pause and figure out, okay, is it a mindset challenge? What is getting in the way? Where is the friction? What's the roadblock or the barrier that's preventing you from doing the things that need to be done on a daily, weekly, monthly basis consistently in order to put you in a position to buy your first storage facility? Because for those listening, you can't really control if you buy an asset, but what you can control are the inputs, right? The micro actions that done consistently over time are going to lead to the macro result you want. In this case, for you, if you're listening, and definitely in Dan's case, buying his first storage facility. Then we kind of zoomed out and we talked about that he's sent, I believe, 4 offers in the past 3 weeks, right? That was back on episode 4. And then I challenged him on having those at least 5 meaningful conversations every single day. So with that being said, here's what I'd like to do. And Dan, I want to kind of invite your voice into the conversation now. Brother, with regards to, here's what I'd like to do on this episode is let's do a performance debrief. In other words, here are the updates. Here are the things that I'd like to hear from you. We know that at this stage of the journey for you, it's all about acquisitions. In other words, it's about finding the deal. If I had to encourage you to focus on one skill to sharpen, one axe to just, keep sharpening, is getting really, really good at finding deals. So in order for that to happen, there's got to be outreach. There's got to be a lot of touch points with sellers and brokers. So why don't I start here? Since our last podcast episode, so the last week and a half or so, how many sellers did you have a conversation with? What I would consider a meaningful conversation, meaning they're interested in selling. You were able to kind of get into a healthy dialogue with them about their facility and their situation.
I had 7 last week.
Okay. Okay.
7
So,
good conversations, and a lot of them were a good number of those 7 were really good conversations. So even though that number is not as high as I would like, as I was aiming for, there were some productive conversations there.
okay, got it. So it sounds like you got good quality conversations, but maybe not quite, the 3 to 5 meaningful conversations that we're searching for on a daily. Because we're talking about really at the end of the week, we want minimum 15 meaningful conversations. So you hit about half of that. What I'm happy to hear, by the way, that you had some quality conversations. We'll get into that in a bit. What do you feel if you had to pinpoint what prevented you from hitting that KPI of at least 15 meaningful conversations in the week, right? Which it boils down to 3 a day if you're just doing this Monday through Friday. What would you say? Like what got in your way? What's the challenge or the friction there around hitting that number consistently?
Yeah, honestly, last week it was non-storage related things. It
Okay.
was life. Life was a little extra hectic last week.
Okay. Look, I appreciate just like we talked about, and I mentioned a few minutes ago, right? It's like, in order for me to help you and coach you, you got to be real with me and you got to tell me what's really going on. That's expected. So you're going to have life things happen. It's not an excuse. It's the reality of our situation. In fact, you know this because when we started working together, and this is something I share with everybody that comes into the Storage Wins coaching community, is your momentum and your energy and your excitement about getting into storage is usually going to be at its peak when you decide to get into something, mixed in with some uncertainty and being a little scared, if I'm being honest, right? But I tell people, expect life to throw you big curveballs. Expect that in the near future, you might even get knocked down. You're going to be tested. Whenever you commit yourself to do something, whenever you decide and commit, you're going to be met with resistance. I feel like it's just a law. It's going to happen. The universe, whatever, word or phrase or label you want to put on it, is going to test it and say, hey, Dan, how bad do you want this? And I know that you know that because you've experienced that. So man, you're a father and a husband before you're anything else, right? Like what you're doing, your pursuit of storage doesn't define who you are. It's a goal you have that's going to help you enhance your life and be able to provide in the way that you want to provide for your daughter, for your wife, for your family, for the things and the goals that you want to do. And for those listening, they can probably relate to that. So it's okay that life got in the way. Here's the question. How do we do what we need to do in spite of the curveballs and roadblocks that life is going to throw our way? So what I think would be healthy, not just for you, but for those listening, is it's a lot easier to game plan before the challenge arises than to try to figure out what to do when the challenge arises. Does that make sense?
Yep.
So, you know me, I sometimes reference sports analogies because I like football and mixed martial arts and basketball and like certain sports like that, right? So you're going to perform better when you've prepped and game planned before tip off or before the whistle or before the ball goes up or the kick or whatever, right? Like if you study and prep, that's going to feed your confidence and that's going to give you the ability to react on instinct and on your training, not try to figure things out in real time. So look, sometimes there's going to be serious life challenges, right? A loved one gets sick, the loss of a loved one, you get injured. Like there's things that happen that, you got to deal with in real time, right? With that being said, what I'd like to do is help you figure out when life throws you another curveball, what is the game plan for you to address it and deal with it so that you still have time to do what you got to do in terms of the outreach, the conversations, the offers, etc. So as I like to do with coaching sometimes is not tell, but sometimes just ask questions and show. So what do you think when you look back at the week and some of the things that got in your way? Is there anything that you feel you could have done to deal with whatever life things were happening? And like, how could you have had both? How could you have gotten to the 15 meaningful conversations and dealt with whatever you were dealing with?
A lot of it last week was cutting my days, my time that I could focus on self-storage short.
Okay.
So I focused certain days on certain things. Um, one day I had 60 dials to storage facilities and only one meaningful conversation. And another day I had only 8 dials and four meaningful conversations from it. So, not really exactly answering your question, but I prioritize different things on different days, and I don't know how I could have made all the dials that I wanted to make each day. I've found that my time has also been divided by um, the VA that I just got started working with and reviewing some of her work. And she's been doing really well. I'm really happy with what she's doing for me. And we've been tweaking what she's doing a little bit. And she's showing each time I ask her to do something, she is unquestionably um, just okay with taking what my feedback and running with it.
Yeah.
And so that's divided my time a little bit. I also have found my time divided between my existing leads. I have a really good amount of existing leads that I'm trying to keep on top of,
Yep.
as well as make cold calls. And having the VA is helping me with the cold call side of it a little bit. But I mean, I of course still want to keep doing that. So the existing leads, I've trying to stay on top of those because there are some that I feel like I really need to keep nurturing because they might turn into something. Has taken a lot more of my time to just
Okay.
keep on top
So,
of all
but
those.
everything you've shared with me is all like are things that you need to do anyway, right? So, like, it sounds like you're doing the right task and activities. What I want to encourage you to do, Dan, is start. And if this was like, if we had more time, right? Because of the podcast, obviously, like I'm gonna kind of fast track this part of the conversation, and I don't want to say give you the answer per se, but just more like prescribe a potential solution here. Is I want you to think about when something gets in your way, and I think this is going to be helpful for anybody listening and watching us. When something gets in your way, ask yourself, was this a one-off like life thing that just out of nowhere that we have to deal with, or is this a friend of mine used to say years ago, like, if you're constantly putting out fires, ask yourself and evaluate, are you the arsonist? And when he said that, I was like, whoa, like, first of all, I'm writing that down and I'm going to use that, right? That's my buddy Mark. So I got to give him credit for that. But like, man, think about it. If you're constantly putting out fires, are you the arsonist? Are you the one starting the fire? Are you the one messing things up and then you're having to, and I'm not suggesting that's the case with you, but that's just more in general for anybody. If you constantly feel like you're quote unquote putting out fires and you're scrambling and you're in catch up mode, it's like, okay, well, this is something that consistently happens. Let's game plan for it, right? What can you do different so that you're not constantly scrambling and putting out fires? And because one thing is to miss certain KPIs, like having X number of meaningful conversations, making a certain number of, analyzing deals, making offers. Look, we're all going to fall off track. The key is not to judge yourself, beat yourself up, but to get back on the horse, right? Last week, I didn't get to the gym as many times as I wanted to. And I woke up the next day. I said, okay, that's not like, let's start fresh now, right? So you fell off the horse. It's all right. But I do think there's value in looking back and saying, okay, what knocked you off that horse? And how can I stay on next time consistently? So is that helpful in just kind of how you frame and think about this? It's like, ask yourself, are there things that are happening consistently that are getting me off track and that are pulling me away from the things I know I need to do in order to accomplish this goal of buying a first storage facility by November 21st? If so, okay, let's discuss and figure out, let's brainstorm, and what are the solutions for this challenge? Right? Do I need to, and I know this is not the case for you because you're an early riser, but do I need to wake up a little earlier to get some quiet time in the morning before, the kids are up and all that kind of stuff? Do I need to put an extra hour later on? Do I need to unplug from social media, Netflix, certain things that are acting as distractions? because we all have 24 hours in a day. So we got to maximize that time within the boundaries that you have for yourself. Is that all clear? Any comments or questions on that, Dan?
Yeah, that's all clear. Um, I feel like I do stay pretty focused during the day,
I would say
and
so. Yeah.
I I have gotten better at like the KPI for offers made. Um, just being able to give a ballpark price while I'm on the phone with an owner has
Mm-hmm.
been something that I've gotten a lot better at, just from our conversations and working on how to do that. Um, it's been hard to figure out. I don't know. Maybe last week was just a one-off week
Yeah,
where, I mean, I
that's
got
fair.
something scheduled like every day that shortened the
Yeah,
time I
like
could spend on storage.
I get it. I
But
get it.
I am getting more focused on how to just get as many dials as I can in when I'm focused on making
Yeah,
cold calls
yeah,
and not spending too much time prepping for those, and the meaningful the follow-up calls. Even I've gotten a lot better at not preparing for those, and sometimes I'll even put into Chat GPT, like, summarize my notes and give me a few good questions for my next call with this owner based on these notes.
good,
And it will give me a few questions, and I'll just like go right into the phone call. So that has
good,
helped save a
good.
lot of time with preparing for those
Brother,
calls.
done is better than perfect, right? So yeah, that was
Yeah.
one of the things that I think we talked about on maybe episode 3 or 2 or maybe last episode. It's like you can't be spending so much time preparing for these conversations, right?
Yeah.
Yes, there's value in the prep for sure, but you're over preparing. And I love the fact that you're leveraging AI, ChatGPT, giving it a prompt, a really good prompt, getting some summary notes, and off you go, right? So
Mhm.
good for you, man. Okay, fantastic. Look, last thing I'll quickly mention before we transition here. If you know you're going to have a week that's going to be packed with appointments or different things that are going to get you off your normal routine, to the best of your ability, plan for that. And maybe it requires, maybe this week, like let's say next week, you have like you're going to be out of town or you have a lot of appointments. Let's kick it into overdrive this week to make sure that the KPIs balance out if you know you're not going to be have as much time next week. Or here's the other option. The other option is you just say, hey, I'm just not going to hit my KPIs this week, and I'm okay with that. And you get to decide if you want to do that or not, right?
Yeah.
So that's up to you. But just make a conscious decision is the point. I'd rather you be proactive than be reactionary and then being like, I didn't hit my numbers because I failed to plan effectively, right? Failing to plan is what do they say? Planning to fail.
Yep.
So okay, beautiful. So you had seven meaningful conversations. Let's transition now to like the positive, which is that. Tell me in summary, what about those conversations did you feel made them meaningful?
It's a storage owner who is open to having a conversation is always a good thing. It means they aren't at least just immediately shutting down the idea of selling their facility. And if they're going to spend their own time to have that conversation, then there's something in their mind that says this is worth talking to somebody about in case I do decide to sell.
Yep.
So they all were open to sharing information about their storage facilities. Some of them gave a ballpark price of the number they're asking. A lot of times those prices are way in the clouds and not going to be where they end up selling their facility because no one would entertain those prices. But just the fact that the owners were willing to talk for 5 to 10 minutes about their business
Yeah.
means they have
Okay.
given some consideration to the idea of
Okay.
selling.
So you had seven meaningful conversations. How many offers did you make?
4.
Okay. So let's start with the positive. I'm going to give you the classic sandwich approach. The sandwich approach to leading and right. So awesome. You got 4 offers. And look, if we're talking about progress, which to me progress equals happiness, We always want to be building progress in the right direction. You had 4 in all of 3 weeks when we spoke on episode 4. So this time you had 4 offers in 1 week, right? So basically that's 8 offers. If we're going to combine it, effectively that's 8 offers in the last 6 weeks. I'm sorry, in the last 4 weeks. 8 offers in the last 4 weeks. So you're averaging 2 offers a week. By the way, if we want to highlight progress, that is significantly better than what you were doing. Wasn't there a point where you had made like 18 or 19 offers in like a year and a half or something, or 2 years? Yeah. Right? So think about that, man. Now you're averaging over the last 4 weeks, you're averaging 2 offers a week, right? And I think I know there's room for improvement and we can bump that up. So that's awesome. Here's now the meat of the sandwich approach, right? Which I know is coming. Great. There's the top of the bread or the bottom of the bread. Great that you made 4 offers. Now here's the meat. You had 7 meaningful conversations. What prevented you from making 7 offers in just 4?
That's a good question.
Right? Because if you had a meaningful conversation, by definition, based on how we define a meaningful conversation, that means the storage owner they would consider an offer. They're at least thinking about selling their facility, right?
Yeah. I would say that the reason would be sometimes in those conversations I can't get a actual revenue number, whether it's a monthly revenue or annual revenue number. If I don't get that number from them, then it's likely what would lead me not to make an offer.
Okay, I got
just going based off of made up numbers that might not be anywhere near.
Okay, let me ask you this. I got 2 follow-up questions for you, and that's fair, right? Sometimes if you're not able to get a key piece of data, here's the question. Can you make an offer without knowing their revenue?
Yeah, definitely.
Okay.
I've done it before, but usually it's based off of a much more time-consuming method to come up with that.
Maybe not.
Otherwise, I'm all ears to finding out another way.
Well, let me give you. So this is not. All right. I'm gonna call an audible here. Going back to a football term, a football analogy. I'm gonna call an audible here. We're not at the point yet in this series in season 2 here where we're gonna get into underwriting. Not yet. Right. But I wanna. That when I got into storage back in 2020, and it's interesting because I do what I preach. When I got into storage, did I think I could figure it out on my own? Yes, I thought I could figure it out on my own. Did I know there was a shortcut and an accelerator to the success I wanted to achieve in storage and to my goals? Yes, and that was through coaching. So now I'm in a position where I'm coaching you and others within the Storage Wins community on how to buy their first deal. Well, when I got into storage, I said, hey, I want a shortcut. So I found somebody that could coach me that was further along in the storage journey. And I don't even know if I've shared this with you, Dan, but you want to know how he initially first taught me to do what's called the quote unquote back-of-the-napkin analysis? Mm-hmm. So check this out. Yeah. This is how I was taught to do a quote unquote back-of-the-napkin analysis. So, and I'm going to walk you through this. This may or may not be the first time you've heard this. You tell me. I don't think we've discussed this. So if you guys get out a calculator, for those of you listening along and following along here, get out a calculator, and I'm going to take my calculator out as well. Now, this only requires doing a hair of research in order to get this number, ballpark, a back of the napkin. And what I mean by back of the napkin analysis, for those that are thinking like, hey, are we at a restaurant? Are we talking about ordering a cocktail? Like, what do you mean back of the napkin? It just means quickly within a minute or 2, jotting some numbers down, coming up with a ballpark range or a ballpark offer, right? That's what it means. So here's how I was taught to do back of the napkin analysis if I don't really have much information. First, we start with the net rentable square feet or footage of the facility. And how can we get that? You might be asking, well, if you jump on Google Earth or Google Maps, and you have the 3D satellite view overview, you can, and it might be hard to walk you through this on a podcast, but essentially If you just put your cursor on the corner of one of the buildings and you right click, then all the way at the bottom, you're going to have like a little menu that pops up. At least that's the way it is at the time of that we're doing this podcast. All the way at the bottom, there's something called measure distance. Well, if you click on that measure distance, now what happens is it's going to give you like 4 little circles or a little circle, and you just click on each corner of the building, and then you finish it off with where you started, and that's going to give you an estimate of the square footage. Okay, and Dan, I know that you know how to do this. So you do that for each building, and then boom, you can add up a pretty good estimate of the net rentable square footage. Are you following me so far, Dan?
Yep.
So let's say we have a 20,000 square foot facility, right? Let's say we have 4 5,000 square foot buildings for a total of 20,000 square feet. The next thing you do is you pull up the competitors within a 3 to 5 mile radius of the facility. You go to their website and you look at what their 10 by 10 rates are. 10 by 10. Now, why 10 by 10? Well, it's just a very round number that it makes the math easy. 10 feet by 10, a 10 foot by 10 foot unit is 100 square feet. So let's say, Dan, that we looked at 4 facilities. Let's say that we have one at 65. Let's say we have 2 at $65 for their 10 by 10, and let's say we have 2 at $75. What's the average of that?
70.
70. Simple. We got 2 at 65, we got 2 at 75. What's the average? The average is 70. So what is, based on the fact that it's 100 square feet of storage and they're at $70 for that unit, what's the price per foot?
It's 70 divided by 100.
Bingo, 70 cents a foot. So you just take $70 divided by 100 square feet, and that gives you 70 cents per foot. So now that we have 20,000 square feet and we have 70 cents per foot, do me a favor, Dan, multiply 20,000 times 70%.
14,000.
Bingo. So just to recap, the total square footage of the facility, 20,000 net rentable square feet times 70 cents a foot. Now, I'm just taking an average. This doesn't mean that we're going to live and die by these numbers, but it just gives us a pretty decent ballpark, right? So 20,000 times 70% is 14,000. Okay? So now we're at $14,000. Now what we do is, the way that I was taught to underwrite, analyze a deal, is a little bit on the conservative side. So from the beginning, I bake in 15% vacancy. Now, you could argue that years ago when I got started in storage, I was being way too conservative, right? Because storage was red hot and like almost every facility out there was 90+% occupancy, right? Even then, I erred on the side of being a bit conservative. So I have friends that underwrite at 12% vacancy, 10% vacancy. I like to be at 15% vacancy. So now take that number of 14,000 and you're going to multiply it by 85%. Why 85%? Because I'm taking out 15% in vacancy. So let me pause. And Dan, I know that you know this, but you might be listening and following along and saying, hey, why 15% vacancy? Well, actually, Dan, let me kick that to you. Why is it not good to have a super high occupancy number? And when I say super high, I'm talking like, why would you not want to be at 100% occupancy or 97% occupancy?
Yeah, you always want to have units available for new move-ins. The new renters are typically going to pay your highest rates. You always want to. Man, I'm sorry, I lost my train of thought.
No, dude, you pretty much answered it. I mean, the only other thing I would add to that is that if you're fully occupied or you have very, very little vacancy, chances are you're not charging enough in rents. Right? Chances are that you're leaving money on the table. So yes, Dan, you're 100% right. You want to have some units available to rent. Your newest customers tend to be the ones that pay the most versus the ones that have been with you for 2, 3, 4 years, right? And you're probably leaving money. Whenever I speak to a storage owner and they tell me they're hey, and they brag about it, by the way. They're like, they're beating their chest, King Kong style. Yeah, I'm at 100% occupancy. I'm thinking to myself, like, buddy, you're leaving money on the table. Like and then I ask them, like, oh, when was the last time you raised the rates? And then they brag again. Oh, I haven't touched the rates in, however long. And that's why my customers have been with me forever. And so that's a sign of a lack of sophistication from an operations perspective. And when I say lack of sophistication, I don't mean that like derogatory, like I'm throwing shade at them, as the kids would say, right? I just mean like that's actually not a good thing that your occupancy is so high. So there's no right or wrong if you're gonna underwrite at 10%, vacancy, 12% vacancy, 15% vacancy. The truth is it's going to be market by market, right? If all the competitors are 100% occupied or all the competitors, then you can probably bump that number up some. But I'm just going to be conservative. So we're going to take 14,000. How did we get to 14? 20,000 times 70%, which is 70 cents per foot based on the math that we did. So Dan, what's 14,000 times 85%?
11,900.
11,900. Okay. 11,900. So now, and by the way, the other way to do this on your calculator is if you do 14,000 times 1 minus 15%. Right? That's the other way to do it. I just like to do it times 85% and just back out the 15 in my head. So now we're at 11,900. Okay. Now that we have that, what is the operating expense ratio that we want to apply to that as a general rule of thumb? Like in storage, what would you say is the range of an operating expense ratio?
35 to 40%.
And look, and some might even say 30 to 40%, right? Like I have some friends that are operating facilities at like 30%. In fact, I know one that's like in the 20s. Now, am I going to expect that I can operate a facility at 27% or 30% operating expense ratio? No. Again, maybe some might argue I'm overly conservative, but I tend to underwrite more at 40% operating expense ratio and then know that I can for sure operate at 40%. And then I can likely get that down to maybe somewhere in the low to mid 30s. But I know if I can make the numbers work with a 40% operating expense rate, I can obviously make them work less. So what is an operating expense ratio? Hypothetically speaking, let's say the facility was generating $100,000 in annual revenue. It would take between $30,000 and $40,000 in expenses, operating expenses, to generate that $100,000 in revenue. That's what that means. And one of the reasons I love storage, because your margins are a lot healthier than in other asset classes like multifamily, right? I think it takes somewhere between 45 and 55% operating expense ratio in multifamily. Not to mention dealing with tenants and toilets, but that's a whole nother conversation. Okay, so now let's take that 11,900 and let's back out. In your case, let's back out. It's a 20,000 square foot facility. It's not a big facility, but it's not a tiny one either. Let's assume 35% operating expense ratio. Even though I might plug in 40, let's go ahead and plug in 35. So you're going to take 11,900. You're going to multiply that by 65%. Why 65%? All I did in my head was 1 minus 35%, or 1 minus 0.35.
7,735.
7,735. We're almost at the final number we want. That is your monthly NOI. That is your, let me backtrack. That is your estimated back of the napkin monthly net operating income. Now annualize that. What does that mean? Multiply that number by 12, as in 12 months in the year. So what's 7,735 times 12?
92,820.
Perfect. 92. Let's just round it up just for nice round numbers here on the podcast. 90. So based on our back of the napkin analysis, Dan, in this hypothetical 20,000 square foot facility with some baked in assumptions of 70 cents a foot is what the market charges for a 10 by 10, and a 15% vacancy and a 35% operating expense ratio, we just back of the napkined it And this facility is probably generating somewhere in the ballpark of $93,000. Now, they might be generating more because it's self-managed by the owner and their operating expense ratio is like significantly less than 35%. But I will look at certain expense line items of an existing facility like taxes, insurance, electricity, utilities, that kind of thing. But I'm not going to base my numbers on their expenses. Right, Dan? So
Right.
we're going to use their revenue. We're going to use our expenses to come up with, hey, what's this thing worth based on their numbers? And then we're going to take another step and say, okay, well, once we raise the rates, once we introduce fee income, right? Like admin fees and late fees and auction fees and all the profit centers, tenant protection, of course. We're going to, once we add that, then we can see, okay, what could this facility generate in revenue once we implement our system, which we're going to get to that in a future podcast episode. But for now, I kind of took a left turn and I just did this back of the napkin analysis. I don't think I've spoken about this kind of way to do a back of the napkin. Have we talked about this, Dan, or did you know this?
I've done it a little bit differently. I didn't know of that method. No, okay. I like that though.
Okay, I'd be curious. What's your method? Because the reason I ask that is because there are many ways to skin the cat, as they say, right? The way that I'm showing you, like if we took 10 storage operators and we said, hey, here's a deal, underwrite this, we're probably all going to have. There's going to be some similarities in how we analyze the deal. There's also going to be some nuance and some differences, and that's okay. The idea is we should all pretty much end up, give or take, within the ballpark of what we think the facility is worth, and then, what we would offer. Now, there's some people that are in different situations that are looking for cash flow, and they might, come in a bit lower. There's some people that are looking for more equity upside. So that for sure, I think, will influence what somebody's willing to offer. But the point is that if somebody knows what they're doing and they're analyzing or underwriting a deal, they should be relatively in the ballpark. Would you agree with that? So walk us through what's your version of a back of the napkin analysis?
I didn't know. I like yours because you don't need a revenue number from the seller in order to do it.
Bingo. And that ties us back. I want to let you answer the question, but I just want to quickly interject. That is the reason I took a left turn and I walked you through this process, because when I asked you, hey, why didn't you make 7 offers instead of the 4? Like, you made 4, but you had 7 meaningful conversations. Mm-hmm. Whenever I hear that you had whatever number of meaningful conversations, it should be matched with an equal number of offers. And yes, ideally, you're able to get from the owner what last year's revenue was, and then this year to date, and then this year to date, you can, divide by however many months, and then annualize it, multiply it by 12 to come up with an average, and then see, okay, is that consistent with last year, or is there a big swing and a big jump, and if so, why? But that requires you. So if you're not able to get that revenue number, this is a back of the napkin way to just come up with a rough value.
Yep, exactly.
And so just quickly, because I kind of interrupted you, ma'am, but how do you do back of the napkin when you have, and I know the answer, but for the purposes of sharing, like, how do you do the back of the napkin when you do have the revenue?
What I have typically done is just applied a quick occupancy and expense ratio, and then apply a cap rate. So if it's $100,000 revenue, multiplied by 0.85 to back out the occupancy, the unoccupied units, and then multiply it by 0.65 to back out the expenses, and then apply like an 8 cap and an 11 cap multiple of that net income, and that'll give me a range.
That's right. So here's what we're going to do in the show notes here. We'll include a link to our quick offer calculator, which essentially is exactly what Dan walked you through. It's just in a pretty looking spreadsheet where all you have to do is plug in either the monthly revenue or the annual revenue. And then based on a range between an 8 cap and an 11 cap, it'll give you, hey, offer between 350 and 475 as an example, right? So that is another way to do just kind of a rough, quick back of the napkin if you have the revenue number. So now you guys are equipped and you have two different ways to do back of the napkin. I want to stress this. Don't be like, there's some value in being lazy, believe it or not, right? Like I know some pretty wealthy, lazy people. And what I mean by that is not lazy, like they're just like sitting on their hands, like eating popcorn, watching Netflix all day. That's not what I mean by lazy. I mean, just like work smart, not just hard, right? And so I never end up buying a facility just based on my back of the napkin analysis. But I do use a back of the napkin analysis to move the conversation up the football field, to stick with that analogy, right? The ball was kicked off. I took it into the red zone, right? I'm in the 20-yard line. They're about to score. I use the back of the napkin just to progress the conversation forward, and then also to get information from the seller. Dan, if you refuse to give me your revenue number, right? And one of the ways that I'm always thinking in terms of what is the benefit to the seller, give them a reason to give you the information you need. One of the books behind me is a book called Influence by Robert Cialdini. Dan, if you've never read it, jot that one down. Have you read it?
I think I have.
Yeah, it's about persuasion and psychology. Phenomenal book. Everybody should read Influence by Robert Cialdini. And if I remember correctly, and it's been years since I read it, I should probably reread it. But in that book, there's like a case study. They did like a focus group or something where there was a bunch of people. I don't know if it was a Kinko's or it was like a photocopy type store. And again, this book was written years ago, so that kind of dates the book. But there was a bunch of people in a store, like in front of a copy machine, waiting to make copies of something. And they tested. Have you heard this story? So check this out. They tested somebody. They told the person at the back of the line, walk all the way to the front of the line and ask the person that is making copies or is about to make copies, ask them if they can. When I was a kid, we used to say, can I butt in line? I don't know if that's a thing across the country, but basically, can I get in front of you? Right? And so they would tell the person, hey, just walk up to the front and ask the person if you can get in front of them. Well, I think it was either 100% or an extremely high percent of people got rejected. Like, no. Like, dude, go kick rocks. Like, no. You can't get in front of me you can't get in front of me. Here's what's interesting. Then they did a round 2. And they said to the person at the end of the line, walk to the front, tap them on the shoulder, ask them if you can get in front of them, but here's the kicker. Give them a reason why. Tell them why you're asking them. So again, give me some grace here because it's been many, many years since I read the book. But as an example, I would walk up to you and I don't know your name, Dan. Excuse me, sir. I'd tap you on the shoulder. Listen, I'm running late for a job interview. Is it okay if I get in front of you and make these photocopies? Well, it was the exact inverse. It was like an extremely high percentage of people were able to get in line. What was the difference? The only difference was you gave the person a reason why. So why do I share that story with you? Think about that from the perspective of when you're communicating with owners, right? In marketing, there's something called think of what's the person's favorite radio station, WIIFM. What's in it for them, or what's in it for me? Right? So speak in terms of what is in it for the other person. As an example, hey, Mr. Seller, if you don't mind me asking, by the way, I'm just shooting from the hip here. I might frame this a little bit different depending on the person's personality type or how the conversation's going, but don't hang on how I deliver every single word, but just get the gist of what I'm about to share. Hey, Dan, look, really appreciate your time. Do you mind sharing with me, just kind of ballpark, what was your revenue last year? And then what is your current revenue? And by the way, the reason I'm asking that is because if you can give me that information, that would really help me giving you the best possible offer. If you were a seller and I kind of framed it that way and I asked that, does it sound different than if I just said, hey, Dan, what's your revenue last year?
Yeah,
Right?
totally.
Doesn't it even sound different in how you like, right? It's like, one is, hey, what's your revenue? Well, the person's like, well, dude, I don't know that I want to tell you that. Like, why are you asking me what my revenue is? The other one is, hey, what's my revenue? Because, by the way, if I give this to the person, he's going to give me the best offer, which is a benefit to that person. So that's something, Dan, I see you writing down. I want to encourage everybody, like, if you're able to write that down or at least think about that when you're having conversations. Ask questions and communicate in a way that it's a benefit to that person. So again, I kind of got off on a tangent, but I think it's tied in and related. Make sure that you're doing that. But if you don't have the revenue, what we just analyzed or what I just walked you through in terms of the back of the napkin is a way to get a ballpark. Now, that just gives you a ballpark on the revenue. Now you can take it a step further and apply a cap rate, which is what Dan talked about. So Dan, dude, how would you define, not to put you on the spot, but I mean, that's the kind of the whole purpose of this, right? How would you explain in layman's terms what a cap rate is, a capitalization rate? Like how, if you were going to explain this to your daughter, right? Let's say she was a little older. How would you explain it to her?
Yeah, I'd say it's a multiple of the income based on how that market is trading.
Okay. So I would explain it a little bit differently, but you're not wrong. I would explain it, it's as an expression of value, right? So here's how I think about it. It's essentially your return on investment. So if you were going to buy the property cash, what is the return you would get? So as an example, let's say there's a facility that generates 100,000 for simple math. Let's say there's a facility that generates $100,000 in net operating income. So what is NOI, net operating income? How do you get there? It's revenue minus expenses gives you your NOI. So let's say we're looking at a facility that generates $100,000 in NOI. And let's say, Dan, that the seller was asking $1 million. What's the cap rate?
Could you say that question again?
Yeah, no, no, I see you smiling. NOI is 100 grand and the seller asking $1 million. We're going to reverse
10.
and get 10. How do we get there? 100,000 divided by $1 million. That gives you the cap rate. Now, let's say you don't have the asking price, but let's say you want to buy it at a 10 cap, right? And you're trying to figure out what to offer. So Dan, if you kind of did back of the napkin, I didn't give you the revenue number, and you did the back of the napkin and you got to, let's say you got to, let me see, what would the math be? Let's just say you ended up at, well, let's say it's 100 and, let me think about this for a second. 135. Okay, not quite. Let's say you're at $150,000 in revenue and you did the math and you got to, let's say it's a 35% expense ratio. That gives you 97,500. For the purposes of the illustration, let's just bump it up to 100. Let's say you did the math, 155 grand in revenue. You applied a 35% expense ratio. Boom, boom, boom. You got to about 100 grand in NOI. And you'd like to buy at a 10 cap, just based on the market and based on some other things that you look at, which we'll talk about in a future podcast. Well, now all you got to do is take 100,000 divided by 10%. Boom, that's going to give you $1 million. So what the quick offer calculator, right? That link should be in the show notes. What that will do is just give you a range based on a cap rate between 8 and 11. Obviously, you want to buy at the highest cap rate possible. And whenever you sell a facility in the future, you want to sell at the lowest cap rate possible to maximize the value that you get for it. Does that all make sense?
Yep.
Dan, would you share anything else? Like, because I want to be mindful of that. There's many people listening that maybe have never heard this terminology. Then there's going to be others that know exactly what we're talking about, but I want to be able to make sure that we speak to everybody. Is there anything else you would share about this part, everything we've talked about to get up to this part of the conversation?
Yeah, just touching on the cap rate piece, I think it's important to keep in mind that cap rate is something that's good to use in rough back of the napkin math, but when you underwrite it in more detail, you're probably not going to buy just based on cap rate. It's still important to do the underwriting, and the cap rate's probably going to be all over the place sometimes, but just for back of the napkin math, the cap rate can get you there.
Yeah, it's such a good point you bring up. I see too many people live and die by like the cap rate, and the truth is that I don't want to say the cap rate doesn't matter, but it's kind of just a piece of the puzzle, right? It's like put it this way, I'm more concerned about the cap rate when I'm selling than I am when I'm buying. When I'm buying, I'm looking at, okay, what am I paying for this asset? What am I buying this business for based on the income it currently produces? And I'm also looking at what could the business be producing in revenue and net operating income, the way that I manage it with my systems, with my processes, et cetera. And there should obviously be a gap there. In other words, how you manage it, and there should be significantly higher than how it's currently being managed and operated and run. So hopefully that all makes sense. But Dan, we're kind of getting deep into it here, and that's fine. By the way, I want to allow for kind of wiggle room. I want to give us space and time to be able to operate in the margins and go off track. I think this was helpful in terms of just kind of giving people a big picture overview of how do you just do some back of the napkin analysis. And hopefully one of the takeaways for everybody listening is meaningful conversations should equal number of offers. Okay? So based on that, what are some of your takeaways? What do you feel you can use from this conversation to build moving forward?
So actually one question I had was that valuation technique that you shared about just using the net rentable square footage to come up with just a really rough estimate of an offer range. Is there a quick way to do that while you're on the phone with the owner? Because I was thinking, how am I going to apply that while I'm on the phone talking to the guy? And
Yeah,
maybe that would be like a call back a week later and say, hey, I appreciate our conversation. I was looking a little bit more at your facility, and I just wanted to get back to you to bounce this off of you to see what you thought.
It's a good question. Let me address the last thing you just said about a week later, because I think you know what. Later. There you go. Like, there's no reason to call. I mean, unless there's a specific reason for it. But if it's up to you, why would you wait a week? Like, you certainly don't need a week to, you know what I'm saying? Like, you want to. Now, at the same time, I don't let the pendulum swing so far the other way. You never want to chase and run after. Right. And sound, be like the eager dog, like, clawing at your ankles to get some food or some water. Like you want to stay a step behind them. Right. I think you know what I mean. And if not, read that book Influence by Robert Cialdini, because it definitely talks about that. But yeah, so that's the edit I'll make to what you said. Not a week later, very soon, within 24 hours. Right. Look, it's a good question from the perspective that, like, I don't necessarily want you measuring a facility while you're having a conversation with the owner, unless it's just a tiny facility and you could like literally knock it out in 20, 30 seconds, right? Because it's like 2 little buildings or something. And here's a hack, or here's a tip. If you see visually on Google Maps or Google Earth and 3D satellite, if you see that all the buildings look to be the same size, just measure one and multiply by the number of buildings. Right now, that's not always going to apply, because sometimes there's a longer building and sometimes all the buildings are not the same shape and size. But I don't want you not paying attention to the owner so that you can calculate it. So here's a potential solution, Dan. Hey, Mr. Owner, just kind of ballpark, right? Like, you don't have to have the exact number, but do you have any idea roughly how many net rentable square feet your facility is? Just use their number. You can always verify it later. And look, and with enough reps, with enough repetitions, you're going to get to the point where you can look at a facility on Google Maps and within 10, 15% have an idea of how big that facility is. You're not going to know how many units it has, but that's okay. We don't need to necessarily know how many units at this stage. If we're just trying to do back of the napkin, you can do, there's 3 ways I can think of doing this without looking at the unit mix and having all that information. In other words, without knowing how many units and how many, the unit size and type of each unit, because that'll, in a spreadsheet, that'll just give you the math and give you exactly how many net rentable square footage. You can ask, you can measure, or there's tools out there. Like if you go to tractiq.com/Pardo, tractiq.com/Pardo, that's a tool that will give you the net rentable square footage, right? It'll give you a lot of other information, but it'll tell you now with whatever tool, whether it's Tract IQ or there's Radius Plus, there's other tools out there. Trust but verify. Don't just go off of what the data it gives you. But there's 4 ways I just told you that you can figure out the net rentable square footage. You measure it, you ask and verify, you leverage a tool like Tract IQ/Pardo and measure and verify, or you get the unit mix. Hey, Dan, how many 5x5s do you have? How many 10x10s? How many 10x20s? Plug it into a spreadsheet. 5 times 10 is 50 square feet times 10 units. Boom, you got 500 square feet there. You got X here, X here. You do a formula, you sum it up, and boom, you have your net rentable square footage. Yep. So does that answer your question? I know it was a good question, but I think the short of it is you ask and just get a ballpark. Or if you look at the facility and you could just hack it, hey, it's 6 buildings that pretty much all look the same size, just measure one. That'll literally take you less than 20 seconds. Mm-hmm. Multiply it by the number of buildings and boom, you kind of have a rough estimate.
Yeah, thoughtful.
Yeah, okay. So any takeaways from this session so far, from this podcast?
The big things I wrote down were meaningful conversations should equal offers made. Give the seller a reason why they should share something with you. And the WIIFM, what's in it for me, always frame it about what's in it for them.
Yeah, brother. Yeah, no, those are great. Those are great takeaways. Yeah, I love that. So with that being said, the idea and the goal here, man, is every single week, let's build progress and momentum. In order to do that, there's got to be some commitments and action items. So between now and the next time that we hop on the podcast, what do you commit to do?
I'll tell you honestly, the commitments have been a hard thing for me to keep up with. I find that working on this has been messy. It hasn't been a perfectly organized process. And
it never is, by the way. It never is, brother.
I know it never is. My focuses have been number of dials, number of meaningful conversations like we've talked about, making the offers, getting that number up. And I haven't been able to reach out to more potential investors. That's something that I still need to get going, and I need to get going with talking to more brokers. Those are all the things that have been going on in my mind from a day-to-day basis, but trying to achieve all of those has not been going as planned.
Here's what I would suggest, and here's how I would encourage you to approach this moving forward. Oftentimes you'll hear me say, take a step back. This is a breathing exercise, right? And I realize that, and I get there. I've been there, right? Like where you have a bunch of things in your head that like, I know I got to do this, and then sometimes depending on, you or your personality, you might tend to get overwhelmed, or you might tend to so what I like to do is on a calendar is set certain time blocks for when I'm going to do certain activities. based on when I know I'm at peak performance. In other words, if you're the person that you're super dialed in right in the morning before lunch, then I would argue that you should make that your peak calling hours, right? Energy is high, you're focused, you're dialed in. The connect rate, by the way, is probably going to be higher than if you were calling somebody at 8 in the morning, which I probably don't recommend. Or conversely, if you're, let's say you work and you can't call people till 9, 10 o'clock, probably not an ideal time to be calling people. It might piss some people off, right? So maybe what you do, Dan, is, as an example, Mondays, Wednesdays, and Fridays from 10 to 11 is my broker dial time, right? Short of the house on fire, God forbid, or dealing with a sick loved one or something that just is a priority that you got to deal with. Short of that, between 10 and 11, this is an example. Between 10 and 11, Monday, Wednesday, Friday, I'm dialing brokers. I'm connecting with brokers. You can do the same exact thing with investors, wholesalers, storage owners, right? So you're going to have a certain amount of dial time per week, and you can't control if they pick up or not. But that's how I would encourage you to approach this. And figure out, be okay with making modifications that fit your schedule or that work better for you. Like what works for me may or may not work for you. Whatever system you use has to work for you. You're not the one that works for the system. The system is meant to make your job in life easier and more optimized, more effective, efficient, not the other way around. So test this out for the next couple of weeks, tweak, make modifications, improve, move forward, test again until you find your groove. You'll find your groove, right? We talked about, I think on the last episode or the one before, you can leverage a tool like if you go to storagewins.com/dialer, right? That's an affiliate link I have for call tools. And by the way, if you use that, we got something for you on the other side of that. But Call Tools is a great dialer. I used to use that back in the day with my wholesaling business. Fantastic dialer, right? That will help you reach more people in a more automated fashion when it comes to cold calling. There's other tools like Mojo Sells, which work as I like Call Tools better, but there's tools like that can help you. And then approach it in terms of, hey, let's figure out where we can put certain time blocks. That way we're working in sprints and we're 100% focused on that task versus, hey, there's a million things I got to do and I got to jam it into this week. Is that helpful?
Yeah.
But don't expect it to be perfect because it never is. I'm allergic to that word, not because I don't want things to be perfect, but because very rarely are they perfect, man. It's just the perfection is in the imperfection. As long as you're making progress and you're growing, and getting sharper, getting better, getting more efficient, optimizing things, and it's growth. We keep chipping away, right? You might swing the axe at that big oak tree, and you're not quite sure which way or where it's going to land. It's going to fall if you just keep at it. And then sometimes you got a dull axe, right? Or a dull axe, I should say. And you got to stop, slow down, sharpen that bad boy so that you can be more effective at chopping that tree down. And sometimes what happens is people they keep swinging the dull axe and then they gas out. Their arms are tired. They can't breathe. They stop and they give up, right? That's what we can't do. By the way, these analogies, man, I know you can, I don't know if you can appreciate them or not, but
this is slow for you. I don't know how you do it.
Well, I didn't make that one up. I've certainly been told that one before, but yeah, man, I got to keep you on your toes, brother.
Yep.
All right, man. Hey, so what are the commitments? Because I asked you the question and then you kind of told me what some of the challenges were. I want to bring you back. Because that's what I'm going to hold you accountable to. What do you commit to do? Even though it's going to be messy, even though it's going to be imperfect, even though life is probably going to throw you a curveball, right? Even with that, what are the non-negotiables?
Yeah, one thing will be for every meaningful conversation to make an offer. And that offer might be on during that conversation or within a day to call them back.
Okay, I love it. How about the number of meaningful conversations? How many between, let's say between tomorrow and it's basically 7 days from today?
I'll say that's a hard one because on Wednesday last week I made 60 calls and had one meaningful conversation.
I get it.
And on Friday I made 8 dials and had four meaningful conversations. So
I'm so glad
that
you said that. I'm so glad you said that
that
because that's exactly right. By the way, that is why I don't like tracking. Not that I don't like it. I don't think it's the most meaningful KPI to track is number of dials because yes, we can just zoom out and take an average, but sometimes I think people tend to focus. I know that I knew some competitors back in the wholesaling days that would track number of dials, and I understood why they did it. If they have a cold caller or something like that, like I get it, but okay, great. They hit their 150 dials for the day, but they weren't tracking meaningful conversations, right? What did that produce? Did they make 100 dials and they got a bunch of voicemails and do not, disconnected? Your call could not be completed type messages on the other end. Like, okay, what good did that do? So yeah, dials. I'm not saying it's not important because it's kind of hard to have a conversation without a dial unless you text them. So, but don't just measure dials. I want to know meaningful combos. And to your point, you cannot control how many meaningful conversations. You can control how many dials you make,
right.
right? And that could be dialing a follow-up. To your point, you've built a healthy pipeline of storage facilities to follow up on, and follow-up is the name of the game. One thing you can do, and here's a tip, a quick tip, and then we can wrap this one up. You remember on one of our Storage Wins coaching calls, I don't know, man, maybe like a month and a half, 2 months ago, I introduced and I shared with you guys the 9-word email. You remember the 9-word email? The
I do.
9-word email, the 9-word email was made famous by this brilliant marketer named Dean Jackson. If you just Google Dean Jackson 9-word email, you can kind of read up on it. But essentially, the 9-word email is something short, quick. It's a focused question that gets them to, it elicits a response from them. So it's not, hi, Dan. I hope you're having a great day. I was thinking about, it's not all this filler stuff. It's not even hi, Dan. I mean, you could put Dan, comma, whatever, but it's like, are you still interested in selling your storage facility?
Mm-hmm.
It doesn't have to be 9 words. It's not like a magic sentence. It's a short, punchy sentence that asks a very direct question that elicits a response from that person. Would you still consider an offer for your storage facility? Right? We used to do that campaign in my wholesaling business, and I've done it in storage, but if I'm being honest, I haven't done it in a while. It works so well that I stopped doing it, right? Can you relate to that? With the wholesaling business on the first of every month, I don't care if it was a Sunday, a Friday, whatever the first landed on, we had an email campaign that would go out that was, are you still interested in selling your property? Are you still interested in a cash offer for your property? Are you still interested in, and you don't have to start with, are you still interested? But essentially, it's got to be a short, punchy. And dude, every single month, it would revive dead leads. People that ghosted us would respond and say, actually, yeah. Or sometimes it was just one word, yes. So I wasn't trying to buy the property at that time with that email. I was just trying to warm up the conversation, like get them to open the door and have a dialogue about it. And dude, throughout the years, we ended up, that campaign would allow us to reconnect with people that had ghosted us or gone dead. And we bought properties throughout the years doing that, or I should say wholesale properties. This is no
Amazing.
different. This is no different, dude. So make sure that when you speak to these storage owners that not only are you getting their mobile number, but you get their email so that You can send them once a month or once a quarter, whatever the case might be, the 9-word email.
I actually sent a 9-word type email to a couple owners in the last 2 weeks,
Good.
and I haven't heard anything back from those, but
That's okay.
it was exactly
Yeah.
along the lines of that Dean Jackson idea.
Keep in mind, dude, don't judge the effect. And I know you're not, but just for everybody listening, don't hear what Dan said. Hey, I actually sent that to a couple people and I haven't heard back. Like, so don't chalk it up to, oh, it doesn't work. Dude, it's
Right.
2 emails. Like, it's a tiny
It was small sample size.
Yeah, like send it out consistently. Look, is it going to work 100% of the time? No, of course not. But what does? Right? But it will be more effective than, for sure, it'll be more effective than not contacting them. Right? And you should always vary your touch points. Email, text, provided you could text them, obviously. Call, provided you can call them. So like sometimes mix in a letter, right? So it requires multiple touch points oftentimes before you get to the yes. So again, Dan, I know we've kind of got a bit longer here, but these podcasts need to be as long. Was I expecting these to be over an hour? No, but they're as long as I feel they need to be. So we'll continue to build on this. Was this conversation helpful for you?
Yeah, very.
Okay, sweet. All right, guys. Hey, listen, this is what I want to encourage for those of you listening and or watching us. Number one, make sure that you're subscribed to the Storage Wins podcast so that you're notified every single week with new episodes. Make sure you're following along the journey. By the way, you might want to even connect with Dan on social media. Build a relationship with him. Clearly, he's somebody who's committed to this craft. So I want to encourage you guys to not just follow along the journey, but reach out to him. If you have opportunities, Dan is an awesome underwriter. Like he knows what he's doing. He knows the business. So reach out to him, build a relationship. Maybe if you have opportunities, you want to run it by Dan. And then the last thing I want to encourage you to do is if you're somebody that you're serious about generating more cash flow, building wealth, maybe you're tired of the grind, chasing deals, maybe you're a W-2 warrior, but you're sick and tired of clocking in, clocking out, and you know there's a better way. Clearly you're listening to us because you're interested in storage. I want to invite you to head over to storagewins.com and go through the process there. It's short, simple, sweet, and we'll connect on the other side and ultimately see if it's a fit. So Dan, any parting words or thoughts, man, before we wrap this one up?
We've covered it all.
All right. Well, we haven't covered it all, but we've covered a lot
of everything, but
yeah, we've covered a lot through 5 episodes. Brother, you're doing great, man. It's all right that you fell off in certain areas. There was also significant progress. If we zoom out, there's been a lot of progress you've made, brother. So let's just continue to chip away, right? We stopped here. We sharpened the axe. Meaningful conversations. I want to challenge you to get to 15 in the next 7 days. I know that might seem daunting or difficult based on your past experiences. Do your very best. Yes, I'm interested in the number of conversations, but I do want meaningful conversations. And then for every single meaningful conversation you have, it's got to be followed up with an offer. Okay? That's what's going to get you on base and in the game. Hard to get on base if you're not swinging the bat. You've heard me say that before. I mean, you could get walked, right? You could get hit by the pitch, but I wanted to feel you certainly can't hit the home run if you don't swing the bat, right? So maybe that's a better analogy.
Yep.
All right.
Sounds like a plan.
All right, guys. Well, I will connect with you on the next episode. Make sure you're subscribed to the Storage Win podcast, and I'll see you on the other side.
Thanks, Alex.